What's up, traders? It's Mark Sebastian, your only option. Today, I'm going to be breaking down what to expect out of non farm payrolls and what the implications could mean. So, with that, let's dig in. All right, everybody. I'm putting this together a little early, so um, not quite ready to give you a full wrap up. But I want to talk a little bit about where we are and where we're going. So we're at a new all-time high, 62.20 right now. Still about an hour left in the day. You'll notice today, kind of the opposite of yesterday. Nice day out of the Nasdaq, not as, and then a little bit weaker out of the Dow. What I would kind of point you toward is I'm going to adjust. I want to show you this because I think you guys are going to be like, oh. And the cues. So I'm showing you guys how some of the sausage is made. So these are the major indexes over the last 2 years. And what I would point out is that SPX and Qs have really outperformed the Dow Jones and certainly the IWM. Notably, if you kind of dial things into the last 6 months, IWM is still down. So the rest of these have all kind of grouped together and recovered. I'm looking for more upside in IWM. I like IWM to potentially move higher. VIX, kind of a different story. Non-farm payrolls, which I'm going to get to in a second, are on Thursday, and VIX is 1660. And if you look at that term structure, we have a huge contango between July, which expires in only 14 days, and regular VIX. So what's happening here? Well, there's a little bit of weekend effect. So when we come in on Monday, VIX is going to be 17 and a half if we just sit here. But half day on Thursday, non-farms out. Coming out of that, we could see volatility break below 16, and you could see some real pressure on VIX futures. I like owning VIX puts. Now, let's get to the meat and talk about non-farm payrolls. Non-farm payrolls are Thursday, and you know what? I don't really need to know what the actual expectations are for the number because the market is telling me what it's expecting. With us trading with the at the money option at about 62.25, the price for this the straddle. So the straddle is the market's best bet on how much the S&P is going to move. Is only about $38, $37. That is about 0.5%. That is next to nothing. So what could make it move? Well, if it's a big miss, you're going to see, believe it or not, I think the market rallies and you're going to see rates pop. Remember, the market is still very tied to interest rates. TLT not having a great day on Wednesday. But if the number misses and misses badly, those rate cut expectations are going to start increasing, and you're going to see rates dropping. For $37, would I buy this straddle into tomorrow? Yeah. What's the flip side? How do we get a big sell-off? That number comes in really strong. I'd be interested to see if the market actually takes good news as bad news. So that's what I'm watching for. What you should be watching for is Leisha's Masterclass. You want to make something out of your long weekend? Leisha's Masterclass on candles, on pitchforks. She's going to teach you so much in a really short amount of time. So if you haven't signed up for it yet, if you haven't joined, click this link and join. If you're watching on YouTube, please like and subscribe. And if I don't see you, I hope you have a wonderful, wonderful 4th of July weekend. I am Mark Sebastian. I am your only option. Happy 4th of July, everybody.